All right, guys, what's going on? This is Ryan, aka Cantor and Clark, and we're just going to do a brief recap of the trade we shared with Blockroots members this morning. Okay, and why ultimately my near-term bias flipped. All right, what things I was considering, what clues I was picking up on, um, and as I mentioned that, I just have to mention that I said recently that you could be right about the higher time frame direction, but you could be too early to a move or too late to a move. So what we find in crypto is that more often than not, traders are employing what I would say is too high leverage. All right, and because of that, they're not position sizing appropriately. Um, they can't put on the proper or adequate stop necessary in order to take advantage of the trade that ultimately will occur and ultimately that they're correct about. But just as a function of them putting on too large of a position, they can't put on the proper, let's say, if this is a market that's trending down now, they can't put on the proper volatility stop because they can't give price enough breathing room. So, if this was the beginning of a new downtrend, your volatility stop would likely be somewhere up here. But most traders that are trading this move are, trading within a range in anticipation of it breaking out, and they're using too high leverage, all right, beforehand. So, for the duration of this structure, okay, since the end or midpoint to the end of September, okay, we've been painting a pretty clear range. And, the auction process is such that, we've come down, okay, found buyers, okay, had a rotation to the upside, okay, and, repeated this process with lows that are a little bit higher than the ones that preceded them. So ultimately what this does set up is, as I mentioned, okay, since each one is higher than the next, you have to imagine that with this low, buyers that are in here, okay, say they're still in over here, if they did not take profits, they'll likely have their stops right here if they're using high leverage. This one is a little bit higher, and then this one is, again, a little bit higher. So ultimately, if we do get that move that tests the lows again, okay, you'll have one of those domino-like effects where one stop goes to the next, to the next, to the next, and then you just have a liquidity event and a cascade to the downside. I've used that term plenty of times before. So, what we were seeing in the beginning, okay, we're seeing an impulsive move off the bottom, okay, followed by a little bit more of a grind down, again, an impulsive move, okay, and now more of a grinding pattern, okay. And I always mention the importance of, okay, price action, as I recently said, is a incredible skill set to have, right? So to have that in your arsenal is incredible, but it leaves out context. So it leaves out the actual interaction, okay, that takes place, as I mentioned before, at an atomized or granular scale, okay? And by that I mean, the battle between buyers and sellers within the actual candle bodies that we're looking at. So, price action tells one story, but on a lower level, okay, when you look under the microscope, you could see just exactly how much buyers are stepping in, okay, when we're talking about active buyers versus active sellers. Now, if you know anything about auction market theory or just auction market in general, okay, price will move typically to find, it'll find support. It'll sell down to a period or a location where their sellers will pretty much extinguish. Okay, it'll find new buyers, and then we'll have a rotation back and forth within. We'll have a rotation where we'll create a structure, and we'll largely spend most of our time painting this structure. All right, ultimately until we breach one of the extremes. Right, so a structure like this, okay, we can imagine that whether it's an upside or a downside break, okay, there would be a certain amount of volatility expected, okay, a certain amount of impulsiveness expected due to the fact that so many eyes are on this, okay, we likely have those orders to buy up here, okay, we likely have those orders to sell down here, right? But within the range, okay, we have a different type of battle taking place. So, what I have drawn for this structure, okay, I'm not just going to draw the traditional lines through candles, okay, I have the high over here, okay, the low over here, okay, and I'm basically capturing the volume profile, okay, minus the extremely low areas. And then what we have is another volume profile, okay, for this rotation, all right? So the rotation that started here, okay, went down to here, and then ultimately the rotation from here, okay, to here. So what I wanted to see if I was looking to short this move, all right, or if I was looking to open up a short with confidence, all right, I would have wanted to see a higher funding rate, okay? I would have wanted to see more of a clue, or more clues rather, that might have indicated that buyers were a little premature, okay, that we already had those aggressive buyers that were potentially trapped, okay, and ultimately what we saw is that that began to shift over here. So you test a low, you test a low again, all right, the impulsiveness might have diminished a little bit, all right, but you start to have this rounding bottom over here, and then the funding rate began to flip negative. Now, the funding rate flipping negative on its own, not really the sign that I would consider, okay, is trade-worthy or actionable, okay, but more often than not, before Bitcoin makes a low, or okay, breaks out of a structure, all right, it will screw over anyone who is late to the move. So what we were talking about was ultimately any short that opened up at the lows. So, you know, there's a cardinal rule: don't short support, don't long resistance, okay? There is something to be said if you're a more aggressive, larger trader in provoking a move and being the one to push the market in that direction. But with Bitcoin, I'd say that in terms of expectancy, you should take the trade in terms of you should actually buy support and sell resistance, and you shouldn't be trying to prematurely decide or enter in before it actually gives way, before we actually see that there is a major structure break and a major shift in the auctioning environment. So what I mean by that is when price comes down to the lows, okay, if the bid starts to stack up, you have that limit support that's very obvious. And I'm not talking about just one spoof. And if price moves up to the highs, okay, in auctioning environment where you have that offer begin to stack up, and again, it's not just a spoof, right? So you see the actual distribution or weight of the order book begin to drastically change. So, you know, it's not just price action, right? So we're talking about the dynamics, okay, that occur between buyers and sellers, between active buyers, active sellers, and passive buyers and passive sellers. So as I've said multiple times before, you know, your active orders, okay, meaning executing at market, all right, those are going to be your smaller traders typically. So when we're looking for absorption, okay, when we're looking for maybe a change in the environment, okay, what we're going to see is that, you know, if we look at let me first point out the fact that right here, okay, we had a basis, okay, between BitMEX, all right, and the actual spot exchanges of, I think this was about $8. So we had an $8 basis right here. It might have been $8 to $10. Okay, so what that means is, well, there's an $8 discount. So $8 discount between BitMEX and the spot exchange. So Bitcoin was $8 cheaper on the leveraged exchange. And this is a good indication when it's at extremes, okay, or when it's a high value of positioning. So of a ton of those traders, okay, jumping ship, all right, in this case, selling at market, all right, selling in anticipation for this structure to break. So when you have that occur, where you have that aggressive order flow, right? So traders are committing, okay, there is no break. If anything, this is maintained. That's when you need to start paying attention. And what I said before is you pay attention to what should happen and when it doesn't. So when you have a bunch of people dumping, all right, so throughout the entirety of this structure at these lows, okay, this is looking at a 4-hour chart. You see that for the most part we have a predominantly negative delta. Okay, so much more aggressive selling than buying, and this is the market orders. So remember, we're talking about market executions, right? So finalized executions at the bid and at the offer. So a very negative delta, okay, an increasingly negative cumulative volume delta. So over a span of time, what we have is the delta continuing to move down. So if we were looking at a Sierra chart, or if you look at tensor charts, not to open it right now, what you would see is you would see that when normally delta should follow price, okay, we would actually see that delta would be dropping off like a cliff right here, okay, and that would be the indication that while price was holding, okay, aggressive sellers were trying to move this down, and again, to no avail. So this represents absorption, all right? So not only do we see absorption, all right, in the form of price not giving or this wall not giving, what we have is basically that final push, right? So negative delta across the structure. Okay, we have a positive delta here, not tremendous. All right, each one of these days though proceeding. So 184 million, 214 million contracts, and this is not on a day, I'm sorry, this is on a 4-hour chart. This is negative 10 million contracts, negative 8. That's just the difference between active buyers and active sellers. Okay, so this is favoring sellers, right? And then a massive difference, so a spike, right? So a spike in that, not a tremendous change in the point of control. Okay, so between the actual volume profile of the candle that preceded. All right, so this candle here, negative 8 million for delta. This one, negative 57. The price, the actual volume difference, okay, is roughly it's 86 million or 88 million. But what do we see here? The difference between this actual dominant order size, okay, and the actual ones that preceded it. We see a large amount of large executions, okay, so in terms of the 400 to 1 million and up, all right, not a tremendous amount, all right, on the bid, on the offer, rather lifting the offer, okay, hitting the bid below that point, all right, all delta being negative, so this entire candle was dominated by sellers, all right, and then what happens to follow that? Okay, so we immediately have a candle with a point of control that is above this point, okay, tremendous amount of buying relative to selling, all right, and then we have right here, okay, relative to the amount that actually hit the bid, we have a tremendous amount of market buying after this tempo has begun to change, and then that's when you start to really see things shift. Okay, so what this looks like is essentially this looks like absorption. So if we're looking at this from a structure to structure standpoint, so if I'm just going back this far, and what I'll do is put on I have a Cantor and Clark indicator, and one of the things that's on it is it'll give you the weekly and monthly open, just for the sake of putting the monthly open here. So we had that negative, okay, that discount between the XBT and BTC price, okay, so that indicates that on the leverage exchanges, all right, a bunch of traders are jumping ship, all right, first small, okay, and well, rather last small, so we have basically compared to these structures, all right, 1, 2, 3, 4, 5, all right, this is pretty much a void minus that last exhaustive throw, okay, and then we see where does the majority of that volume occur with the next bar? It's all the small guys jumping, large guys are buying, all right, so those are large market orders lifting the offer, and we see that begin to shift. And what structure does that begin to shift over? Okay, if we're looking down on a 30-minute time frame, all right, let me just, I don't want to get rid of the, actually I'll just get rid of the drawings. Okay, that should do that. So this is the point of control for this structure. Okay, so again, the market will move down to a point, okay, buyers will diminish, okay, sellers will diminish, it'll find buyers in the formula limit, you'll have absorption, and then it'll auction up, okay, to the next area of interest, all right, which is going to be more often than not an area where there was a large amount of transactions that took place. So we go by the volume profile point of control. So some people use market profile, okay, some people use volume profile, all right, in an asset that doesn't really have market open. I would say that you could use volume profile with confidence, okay? If you're trading an asset that has market open, such as equities, and use volume profile, that first open can sometimes be a little wonky, and it can really throw off where the majority of your volume occurs and can give you some type of false feedback in terms of the data that you're observing. So with this we see, right, so we begin to flip this, all right, sellers are exhausted, and then that delta immediately that is to the downside begins to shift in favor with the limit. All right, we have this supported by the limit, so it's supported by passive order flow and active flow. So this rotation is going to take itself to where? All right, so ultimately I said 8,300. All right, trying to front run what would be the monthly open, okay, around 8,299, or depending on what exchange you're on. If you're on Coinbase, it's different. All right, or what would be the volume point of control for this structure, all right, for this entire rotation. So you have to think about the market like this, okay? It's going to find areas where buyers are interested. It's going to find areas where sellers are interested, okay? And it's going to look for those points where you can find an equilibrium between both. All right, so another thing to notice, at the base of this structure, what do you see as price is moving down? All right, we have, for the first time, okay, what ultimately looks like a healthy amount of buyers step in, right? So I wouldn't go to say that the trend is now north, all right, because When you're within a structure like this, it's important to respect the fact that we are still confined within a range. I would still go from level to level. Now, ultimately, if price maintains this level, okay, so just if we look back through the entirety of the structure, what we'll see is that on our way up, okay, the first place that we found resistance, all right, right here. If I zoom out, it comes back into the view. It's actually this line right here, which is the volume point of control for this entire structure. So that was the first place we were rejected from. All right, ultimately we resolved upward. Okay, right below this volume point of control for this rotation right here. All right, right below the monthly open. Now, if we hold this area, so if we hold what is the volume point of control for this entire structure, so say 8,173, at least if you're long, I would consider moving your stop. All right, if you have currently taken profits, this might be a good area to to enter in if you're looking to enter in a pullback of sorts. At that point, if we were to retake 8,300, ultimately, where's our next area of interest? All right, again, you're going to look for those ledges, all right, between the actual profile, and in that case, I would be looking to test, 8,600 or within that zone. So again, you have to take this one step at a time. Now, more often than not, what we've seen with Bitcoin, okay, is we've seen this pattern occur before, where, for example, we have a structure like this painted, okay, major spill, okay, structure painted, the depth of the offer is checked, okay, price comes down, doesn't spill, all right, take liquidity from up here, and then rinse down again. So we've seen this pattern play out multiple times before, where we break up, all right, everyone gets a little bit too excited, okay, as this entire move has occurred, you have people that are on the sidelines, you have people that are maybe not as confident about the maybe the higher time frame direction or near-term direction, and maybe they ultimately enter in long right here, and unbeknownst to them, it's not that this is a gap, right, because there's a gap right here, right. This is a key area that was an important area, all right, for the duration of this period right here for this range and this rotation. So, like I said, we have to take this from level to level, okay? Bitcoin is currently not trending, all right? It is ranging. So, for all intents and purposes, place your targets, all right? Keep your stops tight. Don't long this thing to financial freedom at this point. Until something changes, nothing really changes. So hopefully that was helpful, guys. All right. I can't stress enough the importance of having a keen understanding of order flow. All right. This is definitely not something that you can have just a tenuous grasp of. It's definitely not something that you could learn in a week or in a month. It just comes from a career really of having an eye for this type of stuff and primarily using this method. Okay, this is more particular. I would say this is much more necessary when you're working within a range. Okay, than at least with Bitcoin, because of Bitcoin has been for the most part a trending beast. So for the most part, for the duration of Bitcoin's movement, you just had to buy the dip. But as I said before, this has been tremendous. This has been what has helped me find this top, what has helped me find this top, what has been useful here, okay, what has been useful right here in particular. All right, this was much more obvious because at this point the funding rate was positive. Okay, all things pointed that traders were committed a little too early. And again, what we saw was that massive divergence, and then ultimately passive order flow and active order flow locking hand in step. So especially with markets that move largely by markets, to parse that sentence properly, when you have a market like crude or let's say something like E-mini, okay, or Bitcoin, okay, they move heavily by market, right? So treasuries limit friction, okay? Gold, a bit of both. So when you have active order flow and passive order flow at lockstep or moving in tandem, in something like crude, okay, or in something like Bitcoin, or in equity futures, you have really rapid movements. So there was a divergence here initially, okay, where cumulative volume delta was increasing, okay, but price was decreasing. And then once we broke this low, this fell off a cliff. Market orders, All right, tanked. Okay, it didn't tank, or rather, cumin volume stabbed downward, and this was supported by uh, all sellers in the market. So this is it, right? I think that pretty much covers everything. Okay, shared this trade this morning. Shared the target. Stop was extremely tight, but at this point, you really don't want to come down and test these lows again, just because of the amount of stops that we likely have accumulated throughout the duration of this structure. So hopefully that is helpful, guys. Hopefully everyone has a fantastic night. Okay, this is Ryan, aka Cantor and Clark, signing out. As always, exercise proper risk management and trade effectively.